Today, we're going to discuss one of the most overlooked taxes in Web3 and cryptocurrency. And no, it's not what you're thinking. We're not even talking about the IRS. We're talking about state tax agencies and specifically sales taxes for on chain transactions. That's right. Many of your on chain transactions for NFTs and other digital and possibly physical goods that you may be transacting with on chain can potentially have sales tax exposure. One of the big problems right now is that industry wide we're seeing non-compliance, and this is leading to very large future audit risks for Web3 companies, NFT artists, and anyone that's transacting on chain that has these sales tax exposures but isn't currently compliant. Now, I believe this issue is such an emerging tax issue for Web3 that's going to really take center stage in the future. I actually published a book on this topic called Navigating the NFT Sales Tax Maze, Wayfair 2.0 for Web 3.0. So let's get into this and discuss how sales taxes apply on chain. So, real briefly, sales taxes are a consumption tax that's levied on goods and services. This is usually levied at the point of sale. It's collected by the seller and then remitted to the government. The amount of sales tax due is going to vary depending on the state and the type of good and service being sold. There's also a number of exemptions to specific goods and times of the year where sales taxes don't apply in specific states and counties. So, how sales taxes work, there's a few factors that are going to be considered whenever you're looking at, does a specific transaction have sales taxes apply to it? We're going to look at the sourcing of the sale. So the sourcing of the sale basically means looking at where is the seller located, where is the buyer located, and then deciding which tax jurisdiction is this sale going to be considered to take place in. And based off of the seller's address and the buyer's address, there's rules and considerations around that. There's origin formed sourcing, destination sourcing, modified origin, and then of course the remote seller considerations. We're not going to go into deep details on every one of these because I have separate videos on them, but understand that sourcing the sale to the correct tax jurisdiction is one of the keys for deciding, do sales taxes apply to your transaction? The next is going to be nexus. Do you have a nexus in the tax jurisdiction that the sale is sourced to? You can have nexus in several different ways. You can have physical nexus, economic nexus, click-through nexus, affiliate nexus. Again, going into the weeds of each of these is out of the scope of this video. I have separate videos on each of these topics, but understand that if you have any form of nexus and the sale, where the sale is sourced, that is another consideration that can lead to you having to collect sales taxes. Now, another consideration, and these all have to be considered together, is product taxability. If you've sourced the sale to a specific jurisdiction where you do have nexus, then we have to look at, is the product you're selling taxable within that jurisdiction? If it is, then it's likely you're going to have to collect sales tax. If the product isn't taxable, if it's exempt from taxes, then even if the sale is sourced to somewhere where you have nexus, then because of the product taxability component, then you're not gonna have to collect sales tax on that sale. So the question starts to become is, where are NFTs and other on-chain transactions being taxed? Where is their guidance on this? And what types of NFTs and what types of other transactions that are taking place on chain have sales tax exposure? So overall, the sales tax exposure is going to depend on the specific NFT. Is this a standalone NFT? Does this NFT represent something else? Like, what is the underlying nature of the NFT? Is this NFT just a standalone piece of art like we would sort of think of with an NFT? Or is this representing you purchase this NFT and you get a ticket that admits you into some sort of event, where you purchase this NFT and it's really a piece of music that you're getting access to, or it's access to some exclusive online group or whatever it may be. On-chain commerce is really just in its infancy, and NFTs are going to play a large part in that. And they're going to be able to represent a lot of different goods and services on chain. So in the preliminary guidance that we've seen from states, you're going to have to look at the nature of the NFT, including the underlying nature of it and what that NFT actually represents. Now, there's over 30 states that currently apply sales taxes to digital products and goods. And it's likely that NFTs are going to fit into these definitions of digital products and goods in all or most of these states, although we've only seen a handful of states currently give guidance. Now, the taxability, again, overall is going to vary state to state, and it's going to be very dependent on that specific state guidance. So that's what we're constantly watching here at Camuso CPA. So the most detailed guidance that we've seen so far is from Washington State, and then behind that, I would say Minnesota. So some examples that we've seen in Minnesota of products that are taxable would be digital products, music, audio, visual works, video games, admissions to events, tangible personal property such as collectibles. So those are all forms of property that if you're selling an NFT or you're just making some transaction for these types of property on chain, it's likely you're going to have a sales tax exposure. So let's discuss now a little bit about some of the challenges and requirements for collecting sales taxes, because this is a big challenge right now for anyone that becomes aware of this tax issue and actually wants to get compliant. There are some requirements and some challenges with this. So number one is you're going to have to collect the customer's address at mint or checkout. Why do you need your customer's address? Because you need that in order to properly source the sale. You're going to need to know your address as the seller as well as the buyer's address in order to properly source the sale. So that is going to lead to you having to collect some information from your customer, and your customer having to give up some of that pseudonymity associated with transacting with a non-custodial wallet. Then after you've gotten this information from your customer, at that same point of sale, you're going to have to quickly calculate the sales tax, convert it to the native cryptocurrency that this transaction is taking place in, so you can total up the total that they have to pay, which would be the mint price of the NFT or whatever the sale price is of the asset you're selling, plus whatever the sales tax component is. That's going to have to be combined and then converted to the crypto so they can complete their transaction. Then the next step you're going to have to do is you're going to have to collect the appropriate transaction data from the customer, from the blockchain, and just from the sales transaction itself, and retain that so you can use it for tax reporting purposes. Now, obviously, this all has to be done in a scalable manner, because you may have hundreds of people, thousands of people at one time that are trying to transact with you if they're minting an NFT or if they're purchasing some good or service on chain. So you need to do this in a scalable manner, and you're going to need to leverage technology. You're going to need to leverage a sales tax system that can help basically automate this process for you. Now, that's what me and my team at Camuso CPA have built at Digital Impost, which is our sales tax software that allows us to do exactly what I just outlined. It's going to collect your customer's information at checkout, calculate the sales tax in the native cryptocurrency, then on the back end, collect all of the relevant tax reporting data for tax purposes. And this is really what you're going to need in order to be compliant for sales tax purposes. So the biggest key, again, is just following these steps and actually collecting this data from your customer, and then making sure that you're reporting it appropriately for tax purposes. So One of the biggest challenges with this, though, as I briefly mentioned, is right now no one's doing this, and I don't really think customers are going to be that inclined to want to start to give this information. But the problem, when I say give this information, I mean give the information related to their address and associate that with their non-custodial wallet. But the issue is we're seeing states such as Washington release guidance where if you're an NFT seller in Washington and you're not collecting your customers' information and you get audited by Washington, they're going to assume that if you don't have the addresses, that all the sales took place in Washington. And why is this such a big issue? Because then you're going to be on the hook for all those sales getting sourced to Washington, and now you didn't collect the sales taxes from your customer. So you're going to have to pay all of those sales taxes out of pocket, plus penalties, plus interest. So there is a huge risk for anyone right now that's transacting on chain, whether it's in NFTs, whether it's for goods or services where sales taxes apply and they're not collecting them right now. Because also what we've seen in states like Washington, states like Minnesota, where they've included NFTs in their definitions of digital products and goods, these are existing definitions. These aren't new definitions. These are just them clarifying that NFTs fit under these definitions of digital products and goods. So what does that mean? It means that they can apply these taxes retroactively. So in a state like Washington, for instance, if you've sold NFTs in Washington for the past 6 years, that you're at risk for an audit because these rules for digital products and goods have been on the books for quite some time, and they're going to be able to go back up to the statute of limitations and basically consider non-compliant marketplaces, non-compliant sellers, and go after them for those taxes. So the other thing I want to point out on this is that there's a risk to marketplaces and to the sellers that are on the marketplaces. Those are the two biggest categories at risk. There also is a risk to the individual from a use tax perspective. But if you're a marketplace, you're likely going to be considered a marketplace facilitator and have the responsibility for collecting sales taxes on your platform wide, meaning you're not going to get to push that responsibility onto the individual sellers on your platform. If you're a seller on an NFT marketplace or on some other real world asset marketplace, we see a lot of them springing up now, you're still not off the hook for this. If the marketplace is not collecting the taxes, there still is an audit risk for you as an individual seller as well. So at the end of the day, if you're selling NFTs, you need to start working with a CPA firm and with technology providers that can assist you with developing a compliance system to make sure that you're properly collecting and remitting sales taxes from your customers when sales taxes apply, because this is really going to be the only way to protect your bottom line and protect your company's profits and ensure that your business is going to continue for the long term. So if you're looking for assistance with sales tax considerations, me and my team are the first group of people that are focused on this industry wide. At Camuso CPA, we can assist you with the tax planning and tax considerations around your business operations and when sales taxes apply. And with the technology we've developed at Digital Impost, we can help you automate the process of collecting this information from your customers and getting into compliance with these sales tax agencies. So if you're an NFT marketplace, if you're an NFT seller, if you're selling real world assets on chain or developing a real world asset marketplace, or if you're transacting on chain as a seller in any capacity where you think sales taxes may apply, contact me and my team today at camusocpa.com, and I'd be happy to sit down and discuss your fact pattern in detail and see where we can help out. Until next time, I'm Patrick Camuso, signing off.